the 5 changes that actually matter to Southwest Florida homeowners, buyers, condo owners, and investors alike. Florida real estate in 2026 feels a lot like a pharmaceutical commercial. The headlines and claims sound great. Lower taxes, more inventory, help for condo owners. Then the fast-talking disclaimer kicks in. Restrictions may apply, flood zones may change, special assessments may occur, and results may vary dramatically depending on which neighborhood you buy in. The good news is, real estate probably won't cause the same side effects as these medications in these commercials. At least we hope not. So today, we're slowing down the disclaimer and breaking down the 5 changes that actually matter to Southwest Florida homeowners, buyers, condo owners, and investors alike. Most importantly, I'll separate what is actually changed from what is still being proposed. So number 1, Florida's major homestead and property tax proposal. We've heard a lot about that. You might have even heard Florida is eliminating property taxes altogether. That was the plan, but that's not what's quite happening. Not yet, anyhow. Florida lawmakers approved a proposed constitutional amendment called Save Our Homes from Excessive Property Taxes. Say that 10 times fast. It will go before Florida voters in November 3rd of this year for the general election and needs approval from at least 60% of the voters. We're thinking it will get approved because, hey, who doesn't want to save an abundance amount of money on their tax bill on a monthly or a yearly basis? But as of right now, this is just a proposal. It's not currently lowering anyone's property tax bill. But if voters do approve it, the homestead exemption for taxes other than school district taxes would increase to $150,000 in 2027. Then in 2028, the exemption would increase to $250,000, which would create meaningful savings for Florida homeowners alike. But there is a major detail for people considering a move to Florida. The proposal creates a distinction between people who maintained a Florida residence by 2026 of the end of this year, and people who established Florida residency after that date. Newer Florida residents would initially receive the existing $50,000 exemption for non-school taxes, and they might have to actually wait until the 5th year before receiving the larger exemption. This could also matter to people who already live in Florida but currently rent. The language focuses on someone maintained a permanent Florida residence, not simply when they purchased a house. The final implementation rules will matter, so this is something current renters and future residents should watch pretty closely. But the bottom line is, you want to be able to get this exclusion, you'd have to be here before December 31st of 2026. So the clock is kind of ticking. The proposal would also reduce the maximum annual assessment increase on many non-homesteaded property taxes or properties from 10% to 5%, which means that could affect second home rentals, investment properties, and other non-homesteaded real estate means. But remember, an assessment cap does not mean your total tax bill can never rise. School taxes, millage rates, reassessment after a sale, and other assessments can still affect the final number. The key takeaway is simple. Don't buy or sell a property today assuming this is already passed. And don't tell someone Florida has eliminated property taxes because they haven't. Florida voters still have the final say in November. It does look promising, but it's not guaranteed. Number 2, Florida's condo reserve rules are becoming real bills. What do I mean by this? This might be the biggest issue facing older Florida condos right now. Following the Surfside tragedy that happened years ago in Miami, they strengthened the structural inspection and reserve requirements for condo buildings that are at least 3 stories or higher, and many existing associations were required to complete what's called a Structural Integrity Reserve Study, commonly called SEERS. And this was due by the end of 2025. The result, some associations coordinating that study would be required to finish a milestone inspection, and they've requested additional time in many cases. But what it does is these studies evaluate expensive building components such as the roof, structural systems, waterproofing, plumbing, electrical system, windows, and other major common elements. The study really determines how much useful life those components have left, and how much money the association should be saving to eventually repair or replace these items. And as I rattled some of those off, those are big ticket items in some cases. And that's where some associations are getting a very, very expensive reality check. They might actually discover that the roof, balconies, concrete, elevators, plumbing, they might all need attention, but the reserve account has been funded like everyone assumed the building would simply live forever. That can lead to higher monthly fees, increased reserve contributions, major assessments, or other association rules and loans. Florida has provided associations with more flexibility, and depending on the circumstances and required owner approval, associations may use regular assessments, special assessments, line of credits, or loans to fund certain reserve and repair obligations. But the flexibility doesn't make the cost disappear entirely. It only changes the bill and how it gets delivered. And another significant change that's coming in 2027, this one's not technically a Florida law, it comes from Fannie Mae's mortgage guidelines. So for condominium projects undergoing a full review, the minimum reserve allocation will increase from 10 to 15% of the annual assessment income for loan applications dated January 4th, 2027 or later. So in other words, an association might be able to satisfy the requirement through a recent reserve study, but the association must be funding the highest amount recommended in that study. Why should a condo buyer or owner care? Because if an association doesn't satisfy Fannie Mae's lending requirements, it may become harder for future buyers in that building to obtain conventional financing, which in turn would shrink the buyer pool, making units harder to sell and place more pressure on owners who need to sell quickly. So this isn't just about whether your monthly condo fee could increase. It also could be whether the next buyer can finance your unit or not. So before buying a condo, ask for the latest reserve study, milestone inspection, current budget, reserve balances, recent meeting minutes, or hopefully you have a great realtor that will provide all that information for you and kind of break it down for you. And also, you might want to find out whether the association is preparing for the conventional financing changes that are coming in 2027, because a $350,000 condo might sound like a great opportunity, or it might be a $350,000 condo with an expensive group project attached to it and fewer future buyers able to finance it. Number 3, new federal help for condo assessments might be coming. So what's that mean? On June 30th, Florida representatives got together and reintroduced the Making Condos Safer and Affordable Act. What's that mean? Fancy terms. I love all these, crazy bill names and proposal names, but the proposal is intended to make it safer and easier for individual condo owners and associations to finance major structural and safety repairs, many of which we mentioned earlier. So it would expand across the FHA-backed financing for certain condo assessments. It could allow qualifying owners to finance certain safety-related special assessments through an expanded FHA program. It would also expand federally insured financing for condominium associations, completing all the major required rehabilitation work. Now, that could be meaningful for someone who gets hit with a large structural assessment but doesn't have the cash or home equity to pay it comfortably. So the major distinction here is what matters. This bill has only been introduced and referred to the committee. It hasn't become law. So another one of the situations like we mentioned earlier, these financing programs are not something buyers or owners should assume will be available. There's a good chance, and it's encouraging that lawmakers are addressing the final side of the condo safety, but you can't use a proposed bill as your financial plan. If you're buying a condo today, you need to evaluate the building on the inspection, reserves, assessment, and financing options that actually exist today. Or, like I said, hopefully you have a skilled realtor that will break this down in an easy format for you, so you don't have to worry yourself about all that. Now, number 4, your flood zone could change without your house moving an inch. Now, that seems odd. This is especially important for certain Lee County owners and buyers because FEMA's proposed revisions to select Lee County flood maps to better reflect current flood risk, or so they say. So for unincorporated Lee County, 6 map panels might be affected. And when we say might and FEMA revising these plans, it's a pretty good distinction that it will happen. So these revised maps are currently expected to take effect around the summer of 2026 and beyond, so we're almost there already. And although the maps and timing remain subject to FEMA's final review and appeal process, some of these properties could get bumped up into a higher flood designation. So this is especially important for buyers using a mortgage that could trigger a flood insurance requirement where one may not exist today, which in essence could cost additional money, affect additional insurance costs, future building requirements, and how buyers view the property when it eventually returns to the market. But remember, a flood zone and an evacuation zone aren't the same thing. So being outside a high-risk FEMA flood zone does not mean a property has zero flood risk. So when evaluating a home, it's important to review the current flood map and the proposed map. Look for things like an elevation certificate, which can save you a lot of money. Your neighbors might be in a flood zone, but you might not be. And whether the property has experienced flooding or prior flood claims. And as of last year, we have a new form that will help you understand that, which is called our flood disclosure form. It will outline any time that a flood has occurred on the property. Also, it might be helpful to obtain a real flood insurance quote before your inspection period is almost over. Now, remember about flood insurance. The good news is if a buyer has had a flood policy for quite some time, there's a really, really high chance that you as the future buyer can assume that at a much lower rate. So in other words, instead of getting the 2026 flood insurance rate, if your previous homeowner or seller that's had that home has owned it for the past 10 years, chances are you're going to get a much significant less rate than you would get in today's standards. So the question is no longer simply, is this house in a flood zone? The better questions are, what's the actual flood risk? What will it cost to insure? And could the designation change? How could that affect resale? And the house doesn't need to move for its financial picture to change. And before we get to number 5, I put these changes into a free 2026 Florida real estate changes guide. You can download it below for the questions, documents, and warning signs, but you should review before buying a Florida home or condo. Now, number 5, what we've all been waiting for. The Southwest Florida market has too much inventory. That story's not as simply as it sounds anymore. You've probably seen the headlines. Florida has too much inventory. Cape Coral is overloaded with homes. Sellers are desperate. Buyers can take their time and throw out any offer that they want. 10, 20% under ask, whatever. But once you actually look at the single family numbers, that story becomes much more complicated. As of June, Naples only had 5.9 months worth of single family inventory. Bonita Springs had only 4.6 months. And even Cape Coral, which made the Wall Street Journal last year, receiving some of the most negative housing coverage in Florida, had only 5.2 months of single family inventory. Now, this isn't an endless supply of homes where nothing's selling. Now look at what's happening in Naples, for example, in the single-family home market. During the first 6 months of 2025, Naples recorded 2150 sales, give or take. During the first 6 months of 2026, that increased to over 2,450. That's a 14% increase in sales compared with the first half of last year. March alone increased from 390 sales to 499, a jump of nearly 30%. April increased from 398 to 474, May increased from 375 to 428, and June increased from 395 to 443. Now the good news is prices haven't necessarily caught up with that increase in buyer activity yet, but that might create a temporary window for buyers that might not be here much longer. There's still motivated sellers, and there's still price reductions with many opportunities to negotiate favorable terms. But if sales continue rising while inventory remains relatively balanced, and remember, typically 6 months or under is a balanced market. We're no longer in a buyer market in many of these territories. Pricing pressure could return, and it could return quickly, especially with all the other headlines that we mentioned, such as the reduction in homestead tax. So that doesn't necessarily mean every home is suddenly going to appreciate. A dated condo facing major assessments is still likely going to sit. House with an old roof and an unrealistic seller is still going to sit. Resale competing directly with aggressive builder incentives, well, you get the point. It's still going to sit. But updated, properly priced homes in desirable communities, especially golf communities or boating communities, sought after new construction or gated waterfront communities, these still often have low inventory that can still move very, very quickly. We do not have one Southwest Florida real estate market. Remember that. It's very different than up north. We have hundreds of smaller markets, and they're behaving very differently. So the next time someone tells you Southwest Florida has too much inventory, the better question is, too much inventory of what exactly?